Good morning, everyone. This is Corey Hinkle with your Ankerstar Wealth Daily Update. We've got two important topics to get to in today's show. We're going to talk about the results of Google's antitrust case, and I'm going to show you some evidence leading to the conclusion that the bull market may not be over yet. And in some places, it may not have even started yet. But first, I do need to remind everyone that this is a financial education presentation. You must do your own due diligence before acting on anything you hear in this presentation. More disclaimer information can be found on ankerstarwealth.com, and the opinions expressed are mine and mine alone. Okay, so what's the market doing today? The market is up about 1/3% for the S&P 500. Tech is dragging the NASDAQ up almost up a full percent, whereas the Dow Jones, a little bit limited there in terms of quantity of names in the index, but you're down about 1/3% there. Today's move is all about, and I will show you this, but today's move is all about Google. Google stock pops 9% after Google avoids a breakup in the antitrust case. It was proposed that Google would need to sell off their Google Chrome browser in order to dodge what one judge viewed as kind of that being the in for Google to have anti-competitive practices. Google Chrome is an important asset for Google. It's a data collecting thing that really helps Google in many of their other assets, even though Google Chrome on its own isn't like a huge revenue driver for Google. So it's a really important piece of the puzzle. And for Google to be able to keep Google Chrome as a result of what was announced yesterday is a very big deal. Also, Google is still going to be allowed to pay Apple for rights to get into that Safari search. Now, Apple will not be able to make Google the exclusive search option, but Google will have the lead position there by quite a large margin. So this is good for both Alphabet, which is Google, and Apple. Now, I do want to jump over. Remember, when we're talking about Google, we're talking about a company that is the highest earnings company in the S&P 500, earning close to $150 billion a year of actual profits. So Google sitting in that number one spot is a very valuable company. Would it be appropriate to sell Google just because it's up 9% today? And we're going to look at a chart of Google in just a second to kind of see what that looks like historically. So you can see Google, peaked about 150 back in 2021, had the drawdown, did break to new highs, and has kind of been consolidating, we'll say, around the upper 100s, 180-ish level for really the better part of 2 years almost, or a year and a half or so. Google breaking out to new highs. What is Google really worth, though? Is Google overvalued now? Remember, Google's earning that $140 billion a year. They're growing quickly, double-digit revenue and earnings growth at this point. Google's really going to need to be above a $3 trillion market cap or valuation in order to be fully valued at all. If you go and look at the sum of Google's parts, so what's actually inside Google, and unfortunately, I'm not going to be able to show you that quickly. Hold on. But if you go look at the sum of the parts, no matter how you slice it or value each part, you're probably looking at an asset that should be worth significantly more than the 2.7 trillion. So here, what I'm going to show you, these are analyst estimates of different parts of Google. So you've got Google Search, you've got DeepMind, so think about the LLMs, Gemini, and all that, Google Cloud, YouTube, Waymo, and the network. Each of these parts is really valuable on their own, and if you add them up, these are just conservative analyst estimates for each part. You're comfortably above a $3 trillion market cap. This antitrust case has really been a a drag on Google's valuation. And I suspect that you're going to see, now that that has been lifted to a really significant extent, you're going to see Google's valuation recover in a meaningful way. Now, I do want to hit on this idea that we're in a bubble. Are we overvalued? What's going to happen to the market moving forward? Real quick, we can look at a 1 day. If you look at a 1 day of the S&P 500, remember, I do want to describe something here. You're looking at the different sectors. So each sector is chunked up. Financials is broken down into subsectors as well, but each main sector has a little title here. So these are sectors of the S&P 500 index. And then, you got the sectors, the subsectors, and then each name, each piece of the puzzle, each block is a company, and they are sized according to their market cap. So Google being a $2.7 trillion company, you can see, oh yeah, it's bigger than a Meta. Meta is around a $2 trillion company. So you can see the size of the company based on the size of their block here. So yeah, this is called a heat map for the S&P 500. If you look today would be considered a low breadth day. We're not getting a lot of stocks moving higher, but because we have Apple, Google, and Tesla moving higher, with all of the other big names just flat, you're getting a nice move up in the S&P 500, even though it's not that we're getting lots of names moving higher today. But I want to zoom out on this to a 3-year. So the S&P 500 is up 60% in the last 3 years. That's going back to September 2022. If you watch TV or you read articles, you could be shown quite a bit of content signaling that the market is really overvalued, we're in a massive bubble, and that things have just gotten way too crazy. But if you really look here, how many companies have outperformed the S&P 500 by a large margin over the last 3 years? You have Palantir, looks to be number one. Palantir wasn't even in the S&P 500 for most of this time. You have Coinbase, or for a significant amount of time here. Coinbase, a big outperformer. Coinbase was not in the S&P 500 for a majority of this time. Interactive Brokers, a huge winner. Interactive Brokers just got in the S&P 500 a couple of weeks ago. So you have some of these big winners weren't in the index, right? A Royal Caribbean, a big winner, but coming out of the pandemic, the stock was really priced for bankruptcy. So it's kind of a little bit misleading. But you do have some of the big winners, the AI trade, right? NVIDIA, Broadcom, Oracle, Microsoft, Meta, Arista Networks, of course. You've got Constellation Energy. Those utility companies have really ripped, particularly the unregulated utilities who are able to capture some of the the energy consumption from the AI trade. And then you've got the aerospace subsector really, really hot the past few years. But look outside of that. Over the past 3 years, I see a lot of things that haven't really participated. And I'm going to show you some charts of things that haven't broken out. These are the U.S. transportation stocks. If we go to a 5-year on that, we're at the same levels we were in May of 2021. And that's an important sector of the economy. Let's go look at the Dow Jones. The Dow Jones, hold on, the Dow Jones left me here. Let me pull it up. This is the Dow Jones, the Dow Jones Industrial Average. If you go to a 5-year, we're still at the same level we were in November of 2024. We've been flat for about a year, consolidating, probably setting up to move higher. If we go to small caps, so unfortunately, some of these tabs got reset here. If you go to small cap stocks, we are at the exact same level we were in March of 2021. If we go to mid caps, let's go look at mid caps. there's hundreds of companies here. We are what, 20%-ish above 2021 levels, and we are flat compared to about a year ago, last November. So we haven't really moved. Let's go look at the entire healthcare sector. What has healthcare done during this massive market rally, right? It hasn't done anything. You're flat since August of 2021. And finally, let's go look at just an entire basket of value stocks. What is the value part of the market doing? And these could come from different sectors, but these are all value-based companies, so fundamentally valued companies. You're flat since last November. So I just want to throw a little bit of cold water on this idea that, oh, we're in some everything rally, everything is ripping, we're in a huge bubble. We really are seeing many parts of the market that haven't participated much at all. And if they begin to participate in a meaningful way, they will benefit the index and the market could move higher still. So I'm not saying we're early in the rally. That's not what I'm saying. I'm simply saying that don't be tricked by this idea that everything out there is in a massive bubble. You just looked at a breakdown of Google's sum of its parts. And if you broke down each part, I actually think that some of the valuations listed on that graphic are actually too low. And even those bring you to a market cap quite a bit higher than where Google is trading right now after their 9% move today. So could the market rally continue? Absolutely it could. And just you have to look at each individual holding. Are there things that are way overvalued? Of course, that will always be the case. But if we look broadly, you just take out a couple of names from the index, there's a lot of value still out there in different places. So, and it could begin to participate. That's all I have for you today. I hope you have a great day, and we will see you tomorrow.